Howdy, everybody. Welcome to Liberty Call. I am Raymond Dahlman, your humble host, and it is Thursday, July 18th, 2024. Hope you're having a fantastical day. Got out, or jury duty finished up today. We acquitted the gentleman. Way to go, young man. And sorry that dumb bitch tried to charge you with those stupid, or accused you of whatever that was. But the DA sucks and didn't bring any evidence. So sorry, dude. If you're ever in Douglas County and you commit a crime, you have pretty good odds of getting off because at least the DA that was on my case, or the case I was a juror on, was terrible. So anyways, all right. Hope you're having a fantastical day. My day's gotten a lot better since I got out of that damn courtroom, and I'm back here in my office. So glad to be here. All right. Well, it is a overcast day here in Colorado. Not too hot. I mean, it's a little warm, but not terrible. Hope it's not too hot where you are. It probably is if you're down in Texas, like most of my friends and family. And all right. Well, if it is your first time watching Liberty Call, you didn't come here to listen to me complain about the legal system. You came here to learn about or hear about what happened in today's markets, right? Right? Exactly. All right. Well, if you could give me some thumbs up, a like, a share, subscribe, follow, and press the notification bell. All right, well, let's go ahead and get into today's numbers. Dow Jones was down 1.29%, 533 points, closed at 4665. The S&P 500 down 0.78%, 43 points, closed at 5544. NASDAQ down 0.68%, 122 points, closed at 17874. The VIX was up 10.01% to date. It's up to 1593, so it's made a pretty big jump from like the 12s to almost 16 in just a couple of days. Canada down 0.54%, Brazil down 1.45%, and Mexico down 1.31%. So the Americas, all bad. All right, let's head over to Western Europe. Germany was down 0.45%, the UK up 0.21%, same with France. The Netherlands down 0.05%, Spain up 0.38%, Italy up 0.43%, Switzerland down 0.58%, and Portugal up 0.34%. Russian exchanges both in the green today. The MOEX up 0.99, the RTSI up 1.24. And the overnights, the Nikkei in Japan was down 2.51%. Australia down 0.27%, same with New Zealand. In China, lots of green. The Shanghai was up 0.48%. The Shenzhen Component up 0.5%. China A50 up 0.46%. DJ Shanghai up 0.48%. Hang Seng up 0.22%. And the Taiwan weighted when it closed on the 17th was down 0.95%. All right. Good stuff. So, all right, let's get into the market recap, see what happened today. SP 500 closes lower as tech continues to lose steam. Remember, we talked about that on, I think it was Monday or Tuesday, that, things were shifting from, growth, technology type things to more your blue chips, your dividends. And that's really what we're seeing. While the Dow has been up on days where the NASDAQ has been way down. Today is probably the first day where we've had all of them in the red at the same time, if I recall. All right, let's get into this. The S&P 500 fell for the second consecutive day on Thursday as volatile trading saw early gains in tech stocks reverse amid ongoing rotation out of high-flying mega-cap tech stocks ahead of Netflix's earnings report. Major tech stocks like Apple, Google, and Amazon and Microsoft extended their recent declines, weighing on the broader market. Despite the trend, NVIDIA managed to rise but 2% as investors took advantage of a dip in the chipmaker stock despite concerns about potential deeper U.S. chip ban. Netflix dropped 1% in after-hours trading after issuing Q3 revenue guidance that fell short of expectations, overshadowing its better-than-expected second quarter results. New applications for unemployment benefits rose more than expected last week, increasing by 20,000 to a seasonally adjusted 243,000 for the week ending July 13th, above the anticipated 229. This data, along with the rise in unemployment rate to a 2.5-year high of 4.1% in June, suggests a cooling labor market as the effects of the Federal Reserve's rate hikes in 22 and 23 take hold. Investors are now pricing in more than a 91% chance of a quarter point rate cut by the Fed in September, according to the CME's FedWatch tool. D.R. Horton, the home builder stock, surged 10% after beating quarterly profit estimates and approving a new $4 billion share buyback authorization. Domino's Pizza, that's what they provided for us for lunch today. Ugh. The pizza chain stock fell 13% after missing estimates for quarterly same-store sales, with inflation concerns discouraging U.S. consumers. United Airlines. The airline stock declined 1% following Q3 guidance that fell short of Wall Street estimates despite reporting Q2 earnings that topped expectations and unveiling plans to cut capacity despite strong summer travel demand. And in other notable movements, Warner Brothers, the stock rose 2% following that the company is considering spinning off its digital streaming and studio businesses from its legacy TV business to address its $39 billion debt load. Wow. Beyond Meat, its stock plummeted 10% amid reports that the plant-based meat producer is in talks with bondholders to restructure its balance sheet. People not buying those fake hamburgers? I mean, I personally wouldn't. I mean, I would have to be really hungry, starving. I mean, like losing weight hungry before I'd eat one of those things. So I don't blame people for not buying them. Overall, the market was characterized by a shift away from tech stocks, mixed earnings results, and signs of a cooling labor market, contributing to investor caution and volatility. All right, good stuff. Got some other news here. I consider it pretty good. The Federal Appeals Court blocks entirety of Biden's student debt relief plan. That is awesome. Hours after President Joe Biden announced his $1.2 billion debt forgiveness initiative for 35,000 student borrowers, the Federal Eighth Circuit Court of Appeals halted the plan. I love it. This decision means that taxpayers, including plumbers and electricians, will not bear the burden of student debts incurred by those who are now unable to repay them. Again, not my problem. I am sympathetic. I do feel bad. You know, should we restructure this so that you can pay it off? You know, maybe freeze the interest. You know, I'm not the bank. I don't care if they get interest back, but I'm not paying it back. The taxpayer is not going to pay it back. So, sorry, kids, not my problem. In the ruling on Thursday, the court granted an administrative stay motion filed by a group of Republican-led states aiming to invalidate the Biden administration's entire student loan forgiveness program, and I'm 100% behind them. The order stops the administration from implementing any part of the SAVE plan, much of which had already been hindered by the lower court decisions. Two separate legal challenges against Biden's SAVE plan have progressed through the courts. In June, federal judges in Kansas and Missouri issued rulings blocking significant portions of the plan, which aimed to expedite loan cancellation and reduce monthly income-based payments from 10 to 5% of borrowers' discretionary income. And let me stop here. See, that's where I have an issue is like they decide how much you owe based upon how much you make, not how much you borrowed. I mean, that's ridiculous. And then you got these other plans where if you go work for like a state government or the federal government, they'll just waive your student loan balances after you work for them for, I think in a lot of cases it's like 10 years, but still, I mean, the government doesn't have any money. They have to take it from us. So for them to pay off someone else's obligation, it's not like the bank is just forgiving it. You know, the bank is not going to expect, or, these lenders who lent the money out to be borrowed, they expect to get repaid. So and they're tied. I mean, these loans are tied up in bonds and all sorts of, probably a bunch of debt instruments that are out there like, I can't think of the word right off the top of my head, but options. I mean, there's not options. I guess you could have options. I mean, but you have all these. It was kind of like with the bad loans back, or the high risk loans that were implemented back 20 years ago that created the housing crisis. Those people, those banks that issued those loans, those loans were then packaged up into tranches and sold as safe investments. So those loans could be packed, anywhere across the globe, stuffed into some sort of an investment plan or investment scheme. So it's not as easy as just there's a lender sitting somewhere waiting for his money to come back in. I mean, these things have been probably bought and sold and traded all over the world. So whoever's sitting on it at that time is going to be in a world of hurt. I guess if the government hands them a check for the money, they're going to be happy, but they're the ones you're really screwing. So, plus the taxpayer. The Eighth Circuit order blocks a previous 10th Circuit Order of Appeals decision that permitted the Department of Education to proceed with the reduced monthly payments. The Department of Education is reviewing the ruling. The Biden administration's pledge to continue defending the SAVE plan, which had been aiding over 8 million borrowers with lower monthly payments, including 4.5 million who have had $0 payments each month. The administration criticized Republican officials for attempting to increase student loan payments for millions of. They're not increasing payments. They're just making them pay what they should be paying per their contract. If you don't, no one's coming and bailing me out if I go and get a bad loan or a bad mortgage or whatever the case may be. I'm stuck with it. Granted, you can't file bankruptcy on these loans. Thank Joe Biden. He was behind that. So, all right, to finish up, the stay underscores the ongoing legal battle over Biden administration's efforts to provide student debt relief, reflecting the contentious nature of this policy area. And again, this is the same Joe Biden who says no one's above the law. You have to follow the law. But when the law says that this is illegal, they keep trying to find another way to do it. They talk out of both sides of their faces. I hate the U.S. government. It's not a blue-red thing. I don't like either of them. There's Democrats that I like, so it's not all, there are lefties that I enjoy their company. However, the people in Congress and in government are just the worst humans on the planet. All right, let's get over to our last article here. Comes from the Mises Institute, CBDC currency creating shortages with full shelves. And this was written by Paul Swick. See what he has to say. I'm not a fan of CBDC. In the realm of economics, mastering counterfactual reasoning is crucial. This involves comparing the outcomes of different scenarios, a skill essential for understanding economic consequences. An example often explored in economics is the impact of price controls, such as price ceilings set below the equilibrium price, which typically result in shortages. These shortages arise because consumers rush to purchase items at the lower price, while suppliers are reluctant to restock due to diminished profits. Politicians frequently impose price ceilings to combat rapid price inflation, which leads to politically unpopular shortages. The fundamental issue, however, lies in excessive government spending, often covered by creating more money. This influx of money devalues the currency, driving up prices and prompting politicians to resort to price ceilings as a superficial solution. A potential, though controversial, solution to avoid shortages while still imposing price controls is the introduction of a central bank digital currency, CBDC. Unlike traditional digital currencies, CBDCs use blockchain technology to track every transaction, allowing the central bank to monitor and control the flow of funds comprehensively. This system could theoretically prevent shortages by regulating purchases of scarce items. Yeah, because I want the government deciding what I'm allowed or what I can and cannot buy. CBDCs, however, pose significant privacy and control concerns. The central bank could potentially micromanage transactions, influencing what individuals can buy based on various criteria. This level of control could suppress market dynamics and lead to a managed economy reminiscent of historical failures in centrally planned economies. Europe. Moreover, the introduction of CBDCs could pave the way for further governmental intervention in the economy, as seen in Ludwig von Mises's critique of interventionism. Each intervention tends to create new problems, leading to a cycle of increasing control and diminishing market freedoms. Thus, while CBDCs might offer a temporary fix to inflation and shortages, the long-term consequences could lead to greater economic instability and a loss of individual freedoms. Improving counterfactual reasoning and understanding economic principles is vital to protecting market autonomy from excessive government control. All right. So, yeah, like I said, I'm not a fan of the government having control of my assets in any way. So, if I want to go out and buy cocaine, that's my business. I'm not saying I am. I personally don't like stimulants, but that should be my business. It shouldn't be the government's decision on how I spend my money, what I spend it on. If I want to be frugal or frivolous, that is my decision. So, anyways, and watch for this government to try and weasel away in, create a some sort of a black swan event or some sort of a problem where hey, we need to do this so that we can have we can control the system. Terrorists use Bitcoin and things like that and other cryptos because it's not traceable. It's like, well, technically it is. Bitcoin is just a giant ledger, so you can see where all the money goes. It is anonymous who the wallets belong to, but again, with some work, you could figure out who that is. All right. Well, that is everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. I hope everyone has a wonderful evening. And if you need anything from me, please, like I said, please go to my website. If you need to get your finances in order, get your financial planning back on track, give me a buzz. I'd be happy to help. Otherwise, I will be back tomorrow, hopefully. And got no jury duty, so I should be sitting here. And hopefully everyone has a wonderful evening. Talk to you later. Adios.